Hello, everybody. It is Tuesday, and that means OCTA. So I just, big thank you to T&D and K8 and everybody here in the chat. It was T&D that reminded me of the annual general meeting from Tesla, and I listened to it, and it has me extremely excited. So as usual, after these types of meetings, I condense all the information into one of my mind maps. I will share it on Patreon later, and also for my Twitter subscribers, which somebody set up, and I don't even know how it worked, but that's there too. But anyway, sorry for being a little bit late today. Thank you for everybody here in Europe for staying up, and hello to everybody who's just waking up in Australia. We're going to talk about the usual stuff, the next catalyst for Bitcoin, a whole bunch of on-chain stuff, a whole bunch of charts, and a little bit of macro, a little bit of bad news. Very important bad news towards the very end. If you have a wallet, please make sure you're around for that. And nowhere else on the internet can you get this much information in this much time. We don't waste any time here. So, and of course, this is edutainment. And for those who are short on time, we do have a Substack. If you're investing, it's vital to stay in the know. I cover a lot of material, like 40 plus nuggets. It's very easy to miss one listening. And for just 15 cents a newsletter, 15 cents, that's all. And proceeds go to our community writers. You can get everything emailed to you, and you can even listen to it on a podcast as well. So that's all available. Let's start with the good news today. First of all, despite the title, there's a lot of good news today. And we're in this weird space where people don't know if we're going to go up or down, and there's so much fear. People are freaking out. Zeno, Cat with a K, you guys are very gracious. But the Fear and Greed Index, if we pop this up, it did pop up too. It's up to 54. Last week it was at 51. It's still in the neutral zone. You got to break above 60 to get out into the greed zone, but it's positive. Now there's some weird stuff going on that I have never seen before, and we'll talk more about that in a minute too. But this is one of the weird things that just doesn't jive with me. So Bitcoin season, per the alt season index, says Bitcoin season is still on, but it looks like it flatlined at 4. And that's weird. Because when we go ahead and look at the last 7 days and compare the performance of Bitcoin to all the other cryptos, you will see something very weird. A lot of green and a little bit of dark green for things like Litecoin, etc. Uniswap, OKB, the star per video last week of a couple of big years too. Solana green, Polkadot green, Binance green, XRP, Doge, Ethereum, you name it. Everything is green. So everything beat Bitcoin. And if you look at the bottom left-hand corner, you'll see Bitcoin dominance, 45.73. So it's come down a little bit. So something is wrong with the alt season map. And again, it's like uncanny how that Bitcoin dominance kept on tapping up at that level. It was like, I think it was 47.5, 48. 47.9, 48, and it just kept on coming down. Adrian, I see you out there. Thank you so much. Let's look at where we are. And this is kind of, it's hard to contain the excitement. We're less than 11 months away. Less than 11 months away from the Bitcoin halving. And everybody knows about it. I keep talking about it, but just people are always asking, where are we? Where were we in the cycle? And I always try to pull up different charts. This one, big thank you to Sanjay for sharing, shows you exactly where we are, kind of the halving reminder. And I will keep on reminding you. And so the date also, I estimated for the halving would be the 14th of April, 2024. Now people are saying potentially the 11th of April, so 3 days sooner. Now, why this is exciting, if you look at the little green box here, the low of 15.5 during the cycle, the high of 70, technically 69K. And we are under what's called price equilibrium. That price equilibrium, I think, is around 42K. And we know where we go from here. Yes, it'll be a bumpy ride, and the summer is coming. And what happens in the summer? Well, we're going to have a look in a second. But, how can you not just be excited about where we're going from here? But there's a lot of weird stuff going on, so let's cover some of this. Now, this is from Econometrics, and this is where we are. Again, you are here on the bottom left in the red. It's very hard to see. But the fourth Bitcoin halving is expected to occur, again, late March, early April 2024. And this is an interesting time for the halving to occur because the US will likely be in a recession or maybe coming out of it. And this will lead to quantitative easing, which is money printing. They're talking about the debt ceiling right now, and they're going to raise it, and the more money will be printed. We'll talk about that later too. And that will increase the money supply, which will increase the price of risk assets. And when QE occurs, it could have a double effect on Bitcoin. First, the halving would reduce the supply of Bitcoin. Okay, we know you've got the same demand and you cut the supply in half. That just propels the price upwards. There's no ifs, ands, or buts, unless, of course, Bitcoin will defy all of the laws of economics, which it's not going to. And second, QE will increase the money supply, which will make Bitcoin more attractive to investors, or simply raise all boats as we go forward. So that's the other piece of good news. Now, there is a Bitcoin catalyst that many people are talking about right now. And this is the history. If you look at the charts here, I want you to try cast your eye on the blue line. I kind of blew it up to the right corner so you could see it. It's from Glassnode. Now, the blue line represents the long-term holder realized price, and the yellow or gold is the Bitcoin realized price. And the reason this is a catalyst is for the realized price to get above the long-term holder realized price. And this is about $600 difference now. And each time this happens, each time the flipping occurs, i.e. the blue gets above the yellow, it typically results in a big rally. Now, the other really interesting thing about this is this always happens in June, with the exception of 2012 when Bitcoin is very new. So it happened in August 2012. It happened in June 2016. It happened in June 2019. And will it happen in June 2023? That is the interesting thing to note. If so, there is a rally afterwards, ladies and gentlemen. Of course, there's that little spike. Remember 2020? People say, oh, but it can dip after. Well, that dip was because of C19, ladies and gentlemen. I have to keep on reminding. In all other parts of history, it's just up from there. So watch that long-term holder realized price if it can cross the Bitcoin realized price. Remember, we're so close right now, and that could be an exciting thing. And that's why I titled the video today, The Next Bitcoin Catalyst. Rocket ship. Now, a lot of people say sell and may go away. But when you look at this happening in June, this happens, that would be a mistake to sell in May and go away or be short Bitcoin. Now let's look at the Bitcoin cohort stack, no stack chart. Blue here indicates when cohorts are stacking. On the left, you'll see at the very top is greater than 10,000 Bitcoin holders, the 1K to 10K. Then you have the 100 to 1K, the 10 to 100, the 1 to 10, and the less than 1 at the very bottom. Now, for the whole month of May, and I've been talking about this a few times, everybody was selling. The 1K to 10K, all the way down to the shrimps, they were selling on the average. The only people that were stacking were those whales that had more than 10,000 Bitcoin. They were dark blue. They were buying it while everybody was selling it. Now they stopped buying. What's weird is they are sitting on their hands, and there's not a lot happening on exchanges. So this is an interesting development which we need to keep an eye on. And it might be because of people being unsure about the debt ceiling, staying out of the market, sitting tight, waiting for the resolution to happen. Again, I'll talk more about that in a minute. Now, while the whales were stacking, we have a new cohort stacking too. So this is the Bitcoin number of addresses holding 100 plus coins, just reached a 2-year high of about 16,250. Now, the previous 2-year high was 16,213. Back in October 2021. Remember that time? Yes. Well, it was a super interesting time. After that, we hit the all-time high. So this is a good sign. These 100 plus tend to be smart people. And somebody drop a comment below how much it takes to become a 100 plus Bitcoin holder, especially now when the price of Bitcoin is exactly 27,060. So that's important. So again, watch these. Watch these players, how they behave, how they operate, because that can be a very good indicator of where we're going to go. And they tend to be very smart. Now, there is another interesting observation, and a lot of people are talking about this, but it doesn't really matter, because as things go through the Lindy effect, the longer they are around, of course, things are going to slow down and diminish, diminishing returns, etc. Now, the growth in the number of whales on the Bitcoin network has been diminishing cycle upon cycle. However, when assessing for our current cycle, we note a slight deviation in trend, with our present epoch representing a 7% larger expansion in whale growth than the prior. So epoch 1 had a 436% growth in whales. Obviously, there weren't any, So that makes sense. Epoch 2, 139%. Epoch 3, 91%. And Epoch 4, 98%. So it is a little bit higher. But again, despite the increase in expansion, the next halving remains an estimated, let's call it 340 days away, 335, 345, something like that. And thus the total growth across the entirety of the epoch remains incomplete. So we don't know where it's going to go, but it will be fun to watch too. Again, watch what the whales do. Next, another interesting one. Again, there's about 25 different indicators why this time is different. This one is the Bitcoin exchange net flow. The one-day moving average just met a 5-month low of about 1.06 or 1006 Bitcoin. A previous low back in 2022 was a little bit less than that. But the key is here, market sentiment basically means if there is a higher amount of Bitcoin flowing into exchanges, it typically, not always, but typically indicates that investors are looking to sell their holdings, which would indicate a bearish sentiment. They put their coins on the exchanges to sell them. But now, okay, this is the converse of that. If there is a higher amount of Bitcoin flowing out of exchanges, this indicates that investors are looking to hold onto their Bitcoin, which would indicate a bullish sentiment. So again, this ticks that little bullish mark, but you could also take into account the fact that people don't trust exchanges anymore, which has a huge impact on this. In addition, let's talk about decoupling from the Nasdaq. In decoupling news, they've been kind of flat. Bitcoin is up 32% over the last 90 days. Nasdaq kind of fell a little bit, just 7%. And we all know the only thing keeping the stock market up right now are the big tech stocks. We'll touch on them in a minute too. Mr. Hammer, how are you, sir? Now let's look at the option action. I decided to go out to March 2024. And the reason I chose that date is because I'm very interested in what the options players are doing right before the halving. This will be approximately, say, 12, 13 days before the halving, maybe 14, maybe 15, somewhere around there at this rate. And what's interesting about this, all the action pretty much is at that level of $50,000 to $65,000 Bitcoin. The put-to-call ratio is 0.08. You will never see such a low ratio. Nobody is placing bearish bets except for somebody at 10,000 still. I won't mention who they're listening to, but again, that's not going to happen. So look what the pros do. Look what the whales do. Look where this option action is betting. That's very bullish. I was thinking maybe 42K by the halving, 10, 11 months from now. But these folks are betting for a lot more. So we'll see. Now let's look at some of our new dashboards. Big thank you to DJ for helping put these together. This is daily fees across Bitcoin, ETH, and Binance. And you can see that they have tanked, which is good because when they spike so much, it makes basically the ETH chain completely unusable. And also the ordinals brought about a lot of expense and congestion to the Bitcoin chain. So everything has come down. Everything is mean reverted like things do in markets, which is a very positive sign. In fact, Bitcoin is still way above average, but it's coming down fast. And of course, Ethereum is there. So that was an impressive piece of return to normal for these two chains. Many were concerned that they were getting completely clogged up and people were going to other chains. That would not be good for anybody. In addition, let's look at another new dashboard. This is the L1, L2 market cap divided by daily transactions. You can see here, and it's a log scale on the left to fit it all in and make it look kind of uniform, but not the winner, but the most expensive in terms of market cap by daily transactions is Polkadot. Number 2 is Ethereum, and number 3 is Cardano out there. And of course, at the bottom, you have Solana. At the bottom being good, being a very, very small dollar amount, about $200 per daily transaction. It's $200 a markup per daily transaction for Solana. And then Tron is about $1,000 in second place. And Flow is in third place. So it's important to keep an eye on all of these. And again, we got the tools to analyze this in real time across many, many different dashboards. More dashboards will be coming, so stay tuned for that as well. Let's look at the stock market real quick. This is stock market performance over the last 7 days. A lot of green, especially in big tech, with the exception of Tesla. which is, I mean, it's the company of the next decade, and it just is going nowhere. George Soros apparently sold all his bags, and that rattled the markets. You can see oil is down to ExxonMobil down a whopping 6%. We got news that Home Depot was rattling the market about earnings, saying they're not even going to be able to stay flat. Revenue could fall by 5%. The only things people are buying is plumbing gear. But Amazon, big move, up 7%. Google, 12% for the week. Meta, nearly 3%. And Microsoft as well. So Google, kind of a late entrant to the AI place, but Google had been there all along. That's the difference. So I was never at all concerned about the fact that Microsoft could eat Google's lunch. They were just biding the time, make sure to do it right. Stephen Weston, how are you, sir? Now, let's talk about a company that's just leapfrogged over Berkshire Hathaway, speaking of Warren Buffett and others, and tech matters. All the money, the top 7 companies in the S&P 500 have pulled in all the returns this year. I always talk about the black holes and everything else, and this is another example. So tech matters. Nvidia, the company that makes AI chips, surged 101% so far this year. Okay, they hit $296, $297 a share. That means the market cap of Nvidia is $722 billion approximately. Don't quote me on that. That was a few minutes ago. And Berkshire Hathaway, $709 billion. So it is now the 5th largest company in the United States. It is big. Remember, right now, what people are looking for in the market, even though the valuation of this thing is insane, they're looking for companies with positive revenue growth and positive gross margins. That's why all the money is flowing into this, and all the money is flowing out of things like Home Depot and other stuff, which is just, not disruptive. That's why we only look at disruptive assets here in this channel, because that's where the money is. Speaking of disruptive assets, Tesla Model Y is now cheaper than the average car in the United States. Okay, Tesla Model Y is considered by many a luxury car, and it's cheaper than your average car, and it's as cheap to run as a Toyota Corolla or a Model 3 is, or whatever else. But you can see how the price cuts have smashed the market, okay, in a good way. Let me show you some stats here for a second. One, California, love the place or hate the place. It is the Harbinger. It tells you what the trends will be for the rest of the country over time. Tesla now sold 20% of all new cars in Q1, which is kind of stunning. 17.1% in 2022, and Q1 2023, 19.5%. Remember as well, the Model Y will be the number 1 selling car on Earth. It already is in Europe. It already is in the US, as long as you pull out pickup trucks, because the top 3 cars are pickup trucks, but they're not really cars. And that is stunning. Also, I think in China, Model Y is the number 1 SUV as well. So it's just crushing the world, and it now is very, very inexpensive compared to other assets. In addition, this is kind of the breakdown if you guys want to see. A strong start to the year. The Model Y is on track to easily beat its record from 2022 and become the best-selling car in the world. And in California alone, for example, if Tesla is able to keep up this pace for the first 3 months of the year, the automaker could sell easily 130 to 140,000 Model Ys in California, crushing the competition. Okay, this is one of the things that Elon Musk literally just said minutes ago. He hinted at it before, but this, the conviction with which he said this made me actually share it right now. So last minute addition to my deck for today. He said he drives FSD every single day. He only gets one human intervention every few days. His car is essentially driving himself around. And he said, this is kind of the thing I want people to wrap their heads around. The single biggest asset value increase in history is going to happen. A software update will make several million cars go from manual driving to autonomous, and it'll be the single biggest asset value increase in history. He said this literally minutes ago. And it's hard for people to really understand where FSD is. And most of the critiques are people who don't even have it or have experienced it. But this is huge. We don't know when it's going to happen. But the way he's talking, he did mention as well a few weeks ago that he believes FSD could be fully capable by the end of the year. And again, if that happens, you have millions of robots floating around. Also, he talked about Optimus being probably their best-selling product in the future. So sometimes he says different things. Take everything with a grain of salt, but their robots are, every quarter, the progress that I see is stunning too. So Optimus is a thing as well. Speaking of stocks, one thing that's very interesting is stock buybacks. This is from the Financial Times. And you can see the USA leads in stock buybacks compared to other places. Number 2 is Europe, excluding the UK. Blue is the UK. But why are stock buybacks so popular in the US? Well, I believe, not just my theory, I believe they artificially inflate stocks because they reduce the number of shares outstanding on the market. Also, it increases demand for the remaining shares, which drives up the price. So, for example, if a company has 100 shares outstanding, each share is worth $10. The market cap is $1,000. But if the company takes 10 shares off the market, there's only 90 shares left, and the price goes to $11.11, and on and on. So this has been a trick used by many big American companies for a long time to keep their stock prices high. They use excess cash, not as dividend, but to buy back stock to inflate the price and then issue stock to the employees. So it's all a scam. So, stock buybacks, in my opinion, are not necessarily a good thing. They're good if you own bags, but they're not necessarily good for the company. I'd rather a company to reinvest the money in growth, not in buying their own stuff back. So, just my thoughts. Anyway, speaking of debt ceiling, a lot of people are concerned about this, but this is a cool survey from Bloomberg. And they asked, what would you do if the US hits the debt ceiling? And this is important because the breakdown between the black, which are professional investors, and blue, retail investors. So obviously top of the charts is gold. We're already seeing some strong gold action. Gold is just above $2,000 now. 51% of professional investors would say they buy gold if the proverbial poop hits the fan, as they say. And the light blue is retail investors. 45.7% of those would buy gold. On the treasuries, this is what many people don't understand is, okay, if the country is about to default on their dollar, why would they buy treasuries? But I don't know. That's number 2, I guess, is just human nature. Instinctive, they think it's safe. And number 3, the reason I share this is Bitcoin. You can see here, retail investors, 11.3% of them would buy Bitcoin. So, I've been saying for a long time that, with the bank crisis, we saw Bitcoin price shoot up. If the debt ceiling crisis happens, we could see Bitcoin price shoot up. We now have that, safety raft, flight to safety narrative that's happening. In addition, 7.8% of people who are professional investors would buy Bitcoin. But there will come a day where this will flip, okay? Gold will not be the number one asset. That's why we're in this game. And this thing is so, so scarce. If anybody wants to see, I'm going to do an update on lost coins for Bitcoin. It is scary. I used to say there'll never be more than 14 million Bitcoin. Now it might only be 13 million. So if anybody wants to see that, let me know below. In addition, by the way, I had a lot of demand for, getting back to Tesla for a second, a lot of demand for retire on Tesla. I've never done one for an equity. I will be doing one this week for Tesla as well. If you don't want it, let me know below. But hundreds and hundreds of people want that actual model to know exactly how many shares of Tesla they need to stack so they can retire in, say, 5, 10 years, etc. All right, back to business. Now we talk about growth. The last piece of good news. European GDP forecast growth is actually a lot better than expected. A lot of people expected European growth to be in the toilet, per se. Some places are a bit flat, like Sweden minus 0.5% and Estonia 0.4%. Ireland smashes it with over 5% GDP growth. That is the fastest growing place in Europe right now. And then other places, again, positive, but not too bad at all. But you don't want to be that very, very light color, of course. And things are worse in other countries that I will not mention too. But so far, so good. Things are looking better in Europe than they were a month ago. Now, time for some bad news. Okay, first of all, this is the crypto market the last 7 days. Based in US dollars, not Bitcoin. You can see Bitcoin down. It's funny, 2.5%. 27,049. I made this not too long ago. It's gone up $30 since then, so it's like 27,080 right now. ETH 1825, still banging between that 1900 and 1750. Binance down, XRP down. Cardano though, Tron, Solana all up for the week. Even VeChain and a couple of other little ones down there. Uniswap, Chainlink. So it's been mixed, but overall the majority kind of bad week. Again, everybody is nervous about the debt ceiling and the future and all the jawboning from the Fed about maybe raising more rates. It's not going to happen, but the jawboning is happening. I have no idea what the Fed is up to. I think they just want to torch everything to the ground and no ideas why. In addition, the big three last week, you can see here, Ethereum is the best performer, down only 2%. Bitcoin down a little bit over 2% to 27,030, and Binance down 3%, down $310. I remember the days when Binance was a lot higher than that. But hey, that's the nature of the beast right now. In addition, this is kind of the top gainers of the week versus the top losers of the week. And I want to cast your eyes on the losers because you don't want to be mixed in this company here. Ethereum Classic, Bitcoin Cash, and MATIC all had bad weeks. But MATIC has been kind of, as we forecast, eaten alive by the other layer 2s, as seen by the data and dashboards that we publish here. They are facing some very, very stiff competition. So be careful if you hold MATIC. In addition, digital asset fund flows down again. This is bad. Fourth consecutive week of outflows. I think about 54 million flew out this week. Total outflow is 200 million over the last month. And that's about 0.6% of assets under management. So you could say a little bit of a spit in the bucket, but still it's substantial. In addition, when we look at flows by asset, this, you can see here, 38 million left Bitcoin in the last week, bringing total outflows, I think, last month to 160 million out of Bitcoin. And this represents 80% of all outflows over the period. When combined with short Bitcoin outflows, it totals 201 million. That suggests as well that recent investor activity has been almost entirely focused on Bitcoin. Now, multi-asset investments saw 7 million flow out as well. There was a little bit of some inflows though. Tron, 200k, Cardano, 500,000, and a mix of others which comprised Sandbox, and I can't remember what other asset. Solana was flat for the week after a very good week last week. Last week was the only asset that was positive. So I guess it's taking a breather. So that is the detail of where the money is going in the crypto market. Now, ugly news, I'm afraid. So let's start with this. Be careful, everybody. There are reports from Kaspersky that there are fake Trezor wallets running around out there, and only buy from official source or directly from Trezor itself. If you have the wherewithal, you can pop it open and see inside. If it looks anything like the thing on the right, it's a fake Trezor. If you have substantial amounts of Bitcoin and you want to make sure it's safe, worth checking out. What these guys are doing is they are hacking the internals of these Trezor wallets, and they're making them create a separate side wallet that they can then drain. So be very, very careful, ladies and gentlemen. It takes a lifetime to build up your wealth and a second to lose it. Don't try save $10, $20 on a wallet by buying it from an unofficial source. It may cost you a lot more. So again, I don't recommend open up your wallet and breaking it. Even if you do, make sure you have your seed phrase safe, then you can replace it. Okay, but just be careful of this. Make sure if you did buy a Trezor wallet from a dubious source, check it out. Okay. Next is the dumpage report. And there's some big, nasty dumps coming your way. Here you can see ApeCoin again, $54 million. Oasis, 11 million. Immutable X, about 13 million. Ronin, 14 million. Avalanche, $142 million coming your way. Optimism, over $250 million in dumpage. And it's only new. Steppen, 1 million a day. And Hedera, $67 million. So, as you know, the reason I mention this, is when it rains down tokens, more supply unlocking, it brings down the price action. So you don't want to be a bag holder, at least, or maybe just check your thesis or put a hedge in place or do whatever to make sure you're safe. In addition, Argentina, for our fans, we've got some people in the audience here from Argentina. Things are sadly getting worse, even after their IMF deal where the IMF made them ban crypto. But things are still bad due to high government spending, weak currency, political instability, etc., etc. This is not a good situation. And this is also an indication of where all fiats will eventually go. This is not isolated to Argentina. And political insecurity, right here, this is the debt ceiling talk. And this is so funny. Today, you couldn't believe these two are actually talking together, because the guy on the left, President Joe Biden, says everything is fine. We're making great progress. And the guy on the right is, this is a disaster. We are nowhere. I don't think we're in a good place. So where does the truth lie? Hopefully somewhere in between. These folks are really rattling markets, making everybody nervous. They will solve it, and after, markets will rally. The question is, how much will they fall in the meantime? If they leave this at 11th hour, we could have a situation like we had back in 2011, where the S&P 500 actually fell by 20%. And I remember that. People were scratching their heads saying, what are they doing? They're, again, trying to torch themselves. Maybe there's a grand plan that we all don't understand. So with that, everybody, that's how many nuggets? 40 nuggets for today. I hope you all learned something. Thank you all for being here. Thank you to the moderators in the chat. Thank you, K8, for hitting the likes. Let me just check. We have nearly 2,000 people watching. I tried to get into half an hour. Again, I'll be doing that quick annual general meeting summary in one of my mind maps. Thank you all for liking. 1/3 of you have hit the likes, so I appreciate you all. Even if you didn't, I appreciate you all for coming. Thank you all for being here. See you all tomorrow. Big week this week. Lots of great stuff going on, and hang tight. Things are like in this weird holding pattern. Bye all.